What's Making Headlines? Your weekly wrap-up of the biggest news stories in the Australian mortgage and finance broker market.
Hello, welcome back to What's Making Headlines. It's Annie, Will and Ben here today with the weekly wrap-up of the news. This week, probably the biggest news that everyone saw, if you didn't, you were living under a rock, was the rate decision by the Reserve Bank of Australia. Shocking decision in that they did exactly what the market thought they did. We're going to, in that they cut rates. So hooray for that. What did you guys think? Were you predicting there was going to be a rate cut this week, Ben?
I was less... after the last decision, I was a little bit less...
gung-ho?
Yeah, well, putting all my eggs into one basket, I might say. But I kind of thought, along with the rest of the market, it would be a cut. And that's kind of consistent with the messaging I think we were getting before. So. Yeah,
pretty much all the banks were like, we think there's going to be a cut. I think most of the conversation was around how big the cut was going to be, 25, 35, 50. We were hearing different things from different economists. Will, you were covering all of this in the run-up and on the day. What was the go? Why did they decide to end up doing what they did?
Essentially, it was kind of widely predicted in terms of after that quarterly inflation, everyone kind of said that gives their argument weight for a 25 basis point cut. I guess the bigger question would be, would they do maybe 35 or some people were saying 50? They went with 25, which was largely agreed would happen. There's always some interesting commentary in the press conference afterwards. So RBA Governor Michelle Bullock, she kind of said essentially what economists had said before, that inflation and employment were the two big drivers that they always say. They had kind of continued to develop in the right direction, and that global outlook remains... she sort of cautioned global outlook remains unpredictable, which she must be getting bored of saying now, but she did say that. And then I thought it was quite interesting. She was asked about the neutral cash rate, which there's been loads of talk around, and she essentially said it's somewhere between 1% and 4%.
Yeah, which is so broad. Yeah. 1% and 4%. Like, she's like, somewhere. It's somewhere.
Yeah.
Because normally they're like, we want target band 2 to 3%. We kind of want to be seeing neutral. I think most of the economists are around, normally say it's around 2.5.
Yeah.
Some say 3. But between 1 and 4, I'm like, she's really just hedging there. Like, it's low. It's, it's a neutral rate. We'll see. But I guess that obviously depends on market conditions. So she can't really say it's this.
Yeah.
And I think she's learnt from, the past where Philip Lowe was so sort of emphatic on saying we're not going to do something until XYZ time. And then everything changed. So he kind of was then crucified for it. I think obviously the RBA now has learnt that lesson pretty well, that they're like, we just won't say anything emphatically. Yeah. We'll be like always super cautious, always hedging our bets so that we're not pinning ourselves to a specific thing. Because of course they have no idea what will happen in the world. So you can't kind of say it's going to be definitely 2%. And then if something changes, you have to kind of revise that and look silly.
Yeah. I think her point was probably also that too much emphasis is on what neutral is and getting to the neutral rate. And there's kind of other factors that they probably have to prioritise as well.
And I think this is probably her main, I imagine, if I was Michelle Bullock at least, just watching her in these press conferences and what she has to talk about all the time, it must be so frustrating being like, there is no, stop focusing on one thing. She's like, I get the market wants to be like, just tell us the answer and we'll get there. Or tell us what the rate's going to be that's neutral. Or, hey, when a rate's going to do X, Y, and Z. She's like, it's fluid. It's an economic thing. So it depends on the economy. So I guess from her, it must be really frustrating to be like, we can't just give you an answer because things change all the time and it depends on the data and it depends what's happening. It depends what spending is doing and unemployment, depends what businesses are doing, depends what's happening with wars, across the world. So, yeah, I kind of feel sympathy for her being like, it would be very frustrating being like, we can't just be like, this is the neutral rate, this is where we're trying to get to, and this is exactly what we're going to do emphatically because things change all the time. Yes. The voting decisions are now being released, and that was pretty interesting because I think when you were writing your story, well, you'd pretty much guessed it was going to be unanimous, and it was. So that's great. I still wish we could see who voted which way. Obviously, for a unanimous decision, you don't need to, but I think when it's split, I'm always really curious to see more detail on why it's split. I think last time they did it, we had a bit more analysis in the Statement of Monetary Policy about some of their rationale for voting for and against, but this time, obviously, no real kind of need to delve too deeply into that because everyone agrees.
Exactly. I mean, it would be interesting to see exactly how they vote, which
Yeah.
they definitely won't do.
Yeah,
But, yeah.
exactly who votes which way, and then also to see I would also like to see maybe a sentence or two from each of the members, even if it's
Yeah.
anonymized, just to be like, what are they thinking?
Yeah, justifying their decision.
Yeah, so I think that would be pretty interesting. But of course, as is always the case, so this is the August rate decision. The next one will be in September, so we haven't got too long to wait for the next potential decision. At the moment, it seems that not many people think it will be a cut. I think most of the banker forecasts are sort of suggesting that November will be the next one we see. So we might be around 3.6%, which is where we currently are now for a while, a few months, and then seeing rates coming down a little bit, seeing how the market reacts. Lenders were pretty fast this time round. I think I got about 100 emails in about 10 minutes at 2:30 on Tuesday from different lenders announcing what they were doing in their rates, when they're going to be moving. Some of the fastest ones, I think Macquarie, I got really early, like 2:30. And then I think I
done
also...
it already, yeah.
Have they done it already?
Today.
Oh, okay. So they passed on the rates today.
Yep.
Well done, Macquarie. So walk us through then, Will. Who's doing what? How long is it taking before people actually see benefit?
Yeah, I guess quite a big mix. So more than 60% have committed to pass on rates in full, and loads committed immediately afterwards. But then obviously there's a bit of a time lag on actually getting it over the line. So the quickest, it was around today. Macquarie passed it on in full today. There are a few non-bank lenders, so Wave Money and Ord Financial also passing on today. All the big four have committed. It's around kind of the 25th to the 28th, all four.
Next week.
Yes. And that's probably about the average, I'd say. And then there's a few actually that's September, which is, I think the industry average was about 12 days. And then there's a few that are a bit longer than that, so kind of September.
Yeah, September.
Which is quite a big rate.
Who's that?
Bluestone. Yeah,
I guess
think there's
actually
a few
because-
others as well.
And I think if I remember correctly, I'm pretty sure Bluestone cut twice not so long ago. I think they did a 25.
they?
I think they did a double cut. So they're probably just trying
Oh,
to
yeah, there could be more.
come
than
back
that.
to market, maybe. Well, I'll have a look. I'll have a closer look at
dig
that
into
because
that,
that's late otherwise.
Yeah.
But yeah, and I think last time in July when we were talking about what lenders were going to be doing, there was a lot of commentary from people saying, well, this is how much it costs if they don't pass on the rate immediately. And of course, like for some lenders, it's quite hard to do that immediately because you've got to update the systems. And if they don't have a particularly great digital system, that sort of process takes longer, supposedly.
Yeah.
But they're still obviously making money in that time. So it's a little bit cheeky.
There was the odd lender that they've obviously cut already for new lenders, but existing lenders.
For new borrowers.
New borrowers, which I guess is well, you'd like to think it just takes longer for existing borrowers.
Yeah, I mean, so annoying. I always have this argument being like, well, if you're currently with the lender, surely you should be rewarded first because you've already chosen them as your bank or your non-bank. So surely existing borrowers should get the rate cut, if not at the same time, maybe a bit earlier. But yeah, of course, they want to be attracting, the competition ramps up. They want to be attracting new business, which is, for most of them, kind of a way of keeping the books growing.
Yep.
Speaking of big books growing, we'll delve into some of the financial results from the lenders that we saw this week, and we'll get into that just after this. So financial reporting season typically is around July when we start seeing kind of the beginnings of the reports from the end of financial year, June 2025. It comes into August and then sort of teeters out towards September. So at the moment, we're still seeing some of the lenders reporting their either full year financial results or their quarterly results for the June quarter. We got two major banks this week announcing some of their financial reports and updates. CBA, one of the big ones, Commonwealth Bank of Australia, obviously the biggest lender in Australia, announcing its full year results. So we were very interested in these results. Well, you covered this for us. What did it tell us?
So I'd say the headlines, obviously full year results, the share of new proprietary originated home loans was up essentially. So 67%, previously 65%. And that's kind of a trend we've been seeing, moving kind of, I don't want to say not focusing on brokers, but it's been going for a while that they're building at their proprietary mortgage lending.
Yeah, we've heard this. I think really it must be about 2 years now that they've been emphatically saying we're focusing on proprietary channel, building that. Because of course they've got the most amount of branches than any bank in the country. They've also probably spent, I'd imagine, the most amount of money on their technology. You know, the CBA app, very well liked by users, and they have so much tech back there. So obviously wanting to get some return on investment, I think, in that.
Yeah, exactly. And in terms of new lending, so broker flows only made up 33%, so that's down again.
33%, a third of their new business coming from broker.
Yeah.
Is that just CBA or is that including Bankwest?
No, so when you take into account Bankwest, it's 46%, which is the same as last year.
Yeah.
So Bankwest obviously a bit more focused on broker business.
Well, I guess if you do the maths on that, if they're holding it firm at 46% when you include Bankwest, that must mean Bankwest is doing a lot because CBA's dropped to 33.
Yeah, massively. Yeah.
And I think this still goes to their strategy. And they haven't emphatically said it, but they keep referring to Bankwest as being broker-led. It's a digital bank that bizarrely is broker-led. So they kind of, they shut down a lot of their branches. They moved to be online. They kind of rebranded. And then they became really the broker part of the Commonwealth Bank group. Now, of course, you still have brokers writing CBA loans. Of course you do. It's a massive bank. And, we've heard from them saying they still want broker business at the Yellow Bank, but really seeing that divide between CBA pushing proprietary and then Bankwest pushing broker. But what do CBA themselves say about what they want from brokers? Because we obviously asked them this week.
Yeah, so we spoke to Baba Zaka, who's general manager of third-party banking, and he's been quite vocal. I think he was on a podcast last month, maybe, or fairly recently, and he was specifically saying we're pro-broker and, really interesting insights. And he said this week that Commonwealth was committed to being the premium lender of choice for the third-party channel, sustainably growing. It's a top priority. And then obviously taking into account broker feedback as well. So he kind of, I guess he's pushing that brokers are still important, still a big part of the business. And although 33% of new lending is going down, that's still a massive amount of money when you think how big Commonwealth is.
Yeah. So I guess the value dollar of even though it's only a third, it's still the value dollar is massive. Do you know what that is? I can't remember what you said.
Off the top of my head.
Yeah, I can't remember what you said what the new business was. Was it 85 million?
It was 67 billion.
67. Oh, sorry, I was overshooting there. So a third of that being from broker.
Still a huge amount.
It's still massive. And I think this is again something that we've been hearing a lot from CBA, and because it was the full year financial results, there was a lot of things to go through. You get the full investor pack, you get all of the interviews, you get the shareholder investor calls, you get the media interviews. There's so much data that we're looking at to unpack these financial results. And some of the other big announcements I think that caught our eye, Ben, were around the technology investments that CBA's been making.
Yeah, so when it sort of reported its results, CBA also announced a multi-year partnership with OpenAI, which is the company that's responsible for ChatGPT. So it's going to be a big tech partnership. What CBA says at the moment it's going to be to sort of boost scam and fraud detection while delivering more sort of personalized customer services. But as part of the partnership, CBA staff will have access to ChatGPT Enterprise, which is the sort of enterprise level.
All the tools,
Yeah, the advanced version of ChatGPT and sort of other advanced AI tools. And I think CBA staff will be able to, they said something about CBA staff going to America and sort of being able to learn.
Yeah, they've got this big hub in Seattle, I think it is.
Yeah. And I think CBA has been doing a lot of stuff in digital lending as well. I think CBA noted that in FY25, 96% of their home loans were settled digitally, and 90% of the loan documents were handled online through proprietary and broker channels. So they're very keen to sort of be...
Sorry, 90% through broker and proprietary were handled digitally?
Of loan documents were handled digitally.
Oh, loan documents, right.
Yeah,
okay.
Yeah. So they're very keen to sort of be embracing advancements in tech and AI and that kind of thing. Yeah,
and I thought when I was reading about this OpenAI partnership, I was like, ooh, what does that mean for mortgages? Now, of course, it's early days. They just literally announced it this week, the partnership, and it's a multi-year contract. So I guess they'll be building this out as they continue to move through FY26 and onwards. But I'm very curious to see what that means. I mean, scam prevention, sure, I get it. And I guess if they're using it for credit assessment staff, similarly, we've been seeing lots of AI tools being sort of launched for credit policy questions and things like that. Maybe they'll be using it for that. But I'd be curious to see if they start rolling out a customer-facing version of a ChatGPT type tool to be like, hey, can I qualify for this mortgage?
Yeah, CBA did note they're sort of rolling out training programs for staff to sort of embed responsible AI usage in-house and that kind of thing, and enhance employee AI proficiency. But yeah, I guess we still don't know. It's still all very new, so we still don't know what that's going to look like in a few years' time.
Super curious to see that coming out and what that means. Because again, like if they are focusing on proprietary and if they are focusing on digital, like what does an OpenAI partnership mean for the customer-facing angle, which they only briefly touched on, saying, for new things for customers. I was like, but what specifically? So I'd be really curious to see if that comes into the lending element. I'm not sure yet if we're there, but we'll keep you posted. The other big lender that we had from this week was Westpac, and they had a quarterly trading update because they're on a different financial calendar than CBA. And I actually took a look at this financial reporting update from Westpac, and normally for quarterly ones we're kind of like, we'll just check in, we'll see what's happening, we'll like have a look at the flows and be like, here's a sort of summary of what's happening with flows. But some of the things that I thought were pretty interesting that I called out were Westpac as a group now has the highest proportion of broker originated business in any of the majors. I think that may have been the case for a while, but I've only kind of recently started paying attention because of the diverging strategies that the majors are having. We know from CBA and also actually NAB, they've both said specifically and emphatically that they're focusing on proprietary, although of course also wanting broker, whereas ANZ and Westpac much more sort of saying we're broker. And Westpac, I feel like we've been talking about this bank so much this year because suddenly they've kind of really turned things around. Like if you think about the Westpac of maybe let's say 5 years ago, quite lumpy turnaround times. They were on, they were off. Some of the credit assessments staff, whenever we looked at the broker pulse surveys, they were kind of criticised quite a lot. The last few months, they have been the golden child of the major banks for brokers. We've seen that in the third-party lending report, which we wrote about in the July edition of the Advisor magazine. It was our cover story. Westpac becoming the top-rated major bank for the first time in 10 years and the only major bank to be in the top 10 rated lenders by brokers for the last financial year. So that was really interesting to us. And some of the things that brokers were calling out was saying the turnaround times are really impressive now, the staff is really impressive now, and actually the experience and rate are really good. And I think typically that's what we're hearing a lot from brokers is that rates are great, both from Westpac and its subsidiary brands, including St. George. So Westpac now, having the, a large broker market share, the largest broker originated share of loans. And I think when we look at this, so I'll just quickly go through some of the stats for you. So there was only a 1% rise in the whole Australian housing loan book. That excludes RAMS, which obviously has sort of been closed among ongoing regulatory action. But some of the things that we were sort of looking at was that, while Westpac's book is growing, large part of that is because of broker. So we're seeing, I think it was something like 64% of the lending group's home loans have now come through the broker channel, which, as I said, is the highest of the other big four. So I think ANZ, now because of the differing reporting times, these are kind of hard to compare because Westpac we're talking to up to June 2025, but ANZ we only know up to March 2025. But at that time in March, ANZ had 60% of its home loan portfolio coming from broker. NAB had 52.9%. That was also in March. And CBA, as we've just mentioned there, seeing about 46% of the group's total portfolio having been originated. So that's a big difference. CBA being 46% only broker originated and Westpac up at 64%. And so we kind of were looking at, well, what's going on here? What's driving it? I think a lot of it is still obviously owner-occupiers, but we're seeing other things come up that Westpac's been focused on as well, including business lending. They had pretty strong business loan growth in the quarter. And we've seen lots of borrowers still doing really well on their repayments. Lots of them still about 2 years ahead of schedule, which is pretty impressive considering, the cost of living crisis we've been going through. And I think this is sort of something we've been looking at increasingly is being like, how are these lenders changing their strategies? You know, we've had quite a few senior appointments at Westpac recently. So Adam Croucher joined as I think he was state manager for Victoria. He used to be the head of broker at CBA and more recently was over at Pepper Money as their Southern regional manager. So he joined. We saw Ray Esho join from ING recently. Sarah Wells-Allen was promoted to, in effect, the head of broker role in February of this year. So they've kind of really been changing their team, bringing in a lot of broker experienced staff members as well. So I'd be really curious to see how that continues on by the time they get to their full year financial results, to see how that's been changing the actual flow of new business as well, and whether brokers are increasingly sending business to Westpac. So if you are experiencing anything with Westpac at the moment, let us know what you think, why you think they're doing so well, why you're sending business to them, because we're super curious to see this sort of turnaround and how they've done it. But I think that was, something that we're always curious to have a look at, is what exactly the strategies are of the different lenders and how they're kind of working on broker, what they're delivering for broker. And I think when we look at the digital element as well, a lot of the questions at the moment we've been talking about, we're saying, well, how are they using technology? How are they using artificial intelligence? And seeing that CBA announcement, I think, with OpenAI, super interesting, because AI, of course, is the big buzzword at the moment. I feel like you can't turn around nowadays for someone talking about AI in some shape and form, whether or not that's actually true AI. Sometimes it's just technology or, the internet. But yeah, if it's actually looking at artificial intelligence and how that can be sort of supporting businesses, and we know brokers themselves are also using AI in their businesses, whether that's with, sort of the more run-of-the-mill, sort of everyday mainstream tech-like off-the-shelf tools to help with content marketing, or if it's more in-depth AI that we've been seeing lots of brokers launching their own solutions and tools. And if you're not yet across AI and you want to find out more, you can also come to the AI Edge for Mortgage Brokers program, which launched this week. So it's going to be held on the 15th of September. And this is going to be a hands-on workshop designed specifically to equip brokers with practical skills needed to integrate AI. So I feel like rather than kind of just talking about it, being like, what can you actually do? How does it actually work? What can you actually deliver? So we're going to be doing these smaller workshops. I think it's about 40 or 50 people. And the reason why it's so small is just to kind of ensure that it can be hands-on, to show, to show brokers how you can actually embed these tools and kind of get to grips with them quickly to run, obviously, a more efficient business. So the goal really is to help brokers kind of learn and identify what they can be doing, scaling their business, and kind of actually practically showing them how to do it rather than kind of talking about AI. So if you are interested in that, the AI Edge program is going to be facilitated by industry veteran and digital strategist Adam Franklin. You can find that on the Advisor website, or just look for AI Edge. So the AI Edge series will actually be going to Melbourne, Brisbane, Perth and Adelaide, and registration's already open now for Sydney. So if you do want to have a look at what you can be doing and how you can be using it, then make sure you register for that. We're going to take a quick break here, but when we come back, just rounding off some of the big news of the week, including what's happening in the lending trends, plus what we've got to look forward to in the coming weeks. And we'll get into that just after this. So Ben, this week we've been looking at some of the figures from the ABS. We just love stats. We love delving into stats for you guys to see what's happening in the market. And you were looking at some of the lending indicators from the Australian Bureau of Statistics. What is happening in market at the moment?
Yeah, well, I was really the lending indicators stats came out from the ABS this week, and I was really interested to see what was going on in the investor lending space, because I was writing a feature for the September magazine. And this has happened a few times where you've started writing something and then you get a data set in, and then
by the time it goes to print, you're like, damn, I have to update all.
Yeah, or you have to update everything really quickly. But I think it was kind of consistent with the idea I was sort of writing in the text, in that investor lending is kind of up and growing at a faster rate than owner-occupied lending. So the ABS data showed investor loan approvals rose 3.5%. during the June 2025 quarter to just over 49,000.
Is that from the March quarter or from the previous year?
From the March quarter.
Yeah.
Yeah. Which was interesting because the March quarter and the December quarter both declined, even though they were year-on-year increases. So all sorts of things to wrap your head around.
Do we think that's because of the rate cuts?
I I think what the Dr. Mishtan, sort of the person who provides some commentary, she said it was actually too early to see the impact of rate cuts in full. But I'd actually talked to some brokers for my feature in the September mag, and I talked to Fred Morelli from Solid Finance in Adelaide, and he was kind of saying lots of investors, both first-time investors and investors who already have a few properties, are kind of returning to market because they're trying to time that right. Because, you know, what we've seen is house prices have increased in the time, which improves their equity. But yeah, it's just trying to get that timing right to make sure you make the move at the right time.
Yeah.
And I think that's what a lot of investors have been trying to do.
Yeah, because I mean, the reason why I was asking about rates is because if we think this is the June quarter figures, so it's April, May, June, and we had our first rate cut in February. So I was a bit like, oh, maybe that would have incentivized people to come into market. I guess, yeah, you're probably right there. The comments from Mishtan saying it's too early because we'll probably have to wait another quarter before we see the other sort of movements really impact. But I guess the sentiment driving it is that investors want to get into market, and probably before the beginning of the spring selling season. Yeah,
exactly. I think that's what we're seeing here. Yeah, and it's interesting to see it outpace owner-occupying led. I mean, the number of owner-occupying loans by so much. I think that only went up by 0.8%.
Tiny. And I think, yeah, again, for owner-occupiers, obviously, they're really waiting for the rate cuts to come through. And I think a lot of them, you know, we've been seeing variable rates at the moment being really pretty competitive. And I think you probably wouldn't be far off getting to below 5% now for some lenders. So lots of owner-occupiers, I think, waiting. But investors, I think, they're pretty proactive. So I think this is why we're starting to see a lot of activity. And I think the reason why we were writing about the investor segment in the September edition of the magazine is because we'd seen some stats from the aggregators. For example, AFG's mortgage index. I think Loan Market also recently launched a report on what they were seeing, and both of those two reports had said investor lending was up quite substantially. And I think it has been really for the past sort of 6 months. Lots of investor activity going up, lots of people really, again, sophisticated investors who've got more than one property being like, I want to get into market, I want to be doing more and doing it early before kind of, I guess, the rest of the owner occupiers come in and then house prices really take off.
Yeah, absolutely. And I mean, we talk so much about housing affordability and housing accessibility, but it just goes to show you that investors sort of play a role in that as well, I guess, you know, providing properties that people can rent rather than buy.
Well, coming up next week, the government will be hosting the Economic Reform Roundtables. I feel like we've been talking about this for ages, so it's good to actually finally have it. I think it's 3 days of sitting in Canberra and talking from different parts of the market. So I think there are some lenders going. There are, you know, housing people going. We've seen lots of commentary from all the different parties involved saying this is what we want to be talking about, but also just from, I think, generally people saying this is what we would like to see from the Economic Reform Roundtable, particularly when it comes to housing. Some of the arguments, I think, Will, that you've been covering, I think the MFAA was asking for reform on stamp duty, was it?
Yeah, loads around tax, I'd say.
Yeah.
Specifically to do with housing.
To do with housing. Yeah. And then I read a story this morning saying that there was some leaked Treasury documents that were talking about using AI to help free up, to help identify areas that they can free up for building approvals. Not sure how that would work, but sure. AI again, just being like, use AI, we can do it. So I'm really curious to see that. So we'll obviously be reporting as much as we can from that to do with housing and what's going to be happening there. Australian Broking Awards. So if you haven't yet got your ticket for the ABAs, then hurry up because it's coming on the 29th of August at the Star in Sydney. Tickets are selling fast as well. So make sure you get them so you don't miss out. We've got lots of people wanting to get in, and that will be, it's a daytime awards, which I always really enjoy the ABAs being daytime. It's on a Friday, so you can get in, do the awards, go home for the weekend. Amazing. And then so that's run in partnership with Principal Partner NAB. And then we also have the after party courtesy of Capital Bridging Finance. Probably the only time an after party starts about 3:00. But yeah, really looking forward to having that. And fingers crossed this rain has stopped so that we have a nice day for it. But either way, we'll be inside, so it shouldn't matter too much. But if you haven't yet got your tickets to the ABAs, then do make sure you do so very soon because they will sell out. And you can find that at the AustralianBrokingAwards.com.au. Will, Ben, any nice plans for the weekend?
Yeah, usually don't have much planned, but I think I've overcommitted myself with catch-ups with friends and family, so I'm just going to be a wreck on Monday morning.
You're just going to be out socialized.
Yeah.
I've got marathon training and then a pub crawl.
Whoa,
So,
what a combo.
low high.
Yeah, two
That
different
classic
types of
mix.
marathons. Yeah.
Marathon training and then a pub crawl.
All the good work will be out the window.
God. Not on the same day?
Yeah, tomorrow.
Oh, you make sure you drink some water. You're going to be so dehydrated.
Yeah.
Oh, well, that sounds good. My in-laws are over from the UK at the moment, and I just love this about like when you have people over from different countries about what they find interesting about the country you live in. They have pretty much been on an RSL pub crawl across the country. So they flew into Brisbane a couple of weeks ago, and they've been driving down back to Sydney and stopping obviously along the way. And they must have ticked off now, I'd say probably about 25 different RSLs. And now it's become a thing where they're like, we want to go to another one. So tonight I'm going to an RSL for dinner and take another one off the list as they come back to Sydney. So I'm meeting them in DY, which is apparently quite a big one. And if anyone else knows any great RSLs in the New South Wales area near Sydney, let me know what we should be putting on the list. But yeah, they're finding that they love an RSL and they're finding that really fun. So yeah, that's something that I'll be doing this weekend. And then preparing for next week as we get ramping up for all of the roundtable reform stories coming up, plus all the other things happening in the broking industry. We hope you have a fab weekend as well, and catch us next week for another episode of What's Making Headlines. And do make sure you also tune into the Elite Broker, New Broker podcasts, plus In Focus podcasts if you haven't already. And you can find them all on the Advisor Podcast Network.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.